So, I mean, again, first thing I want to do is just thanks for, giving up like, half an hour or an hour of your Monday afternoon, obviously, to come and hear a little bit more about SIB and our flexible finance program. A little bit about social investment business first for people who aren't aware of us. We're a fairly well-established social investor. We celebrated our 20th anniversary last year. And what we do, we manage, well, over the years, we've done a lot of different things, but primarily what we do is we disperse and manage social investment loan funds. We've done lots of work around investment readiness as well. So things like running kind of the big potential grant program, running the Reach Fund, which is still open active at the minute. But everything around social investment. And earlier this year, we were selected as the key delivery partner to deliver the Youth Investment Fund, which is, I think it's £360 million worth of capital and revenue funding, purely grant funding. So that was a bit of a departure for us, but that was for organisations working with children and young people. So, like I said, I'm here to tell you a little bit about the flexible finance, and I'll kind of come onto that in a second. The reason we introduced flexible finance is that it was kind of long recognised that organisations which were Black and racially minoritized led, they found it really difficult to secure social investment. I mean, we knew that from our own fund delivery. We have a close working relationship with other social investors, so we knew it feedback from them as well. And there's various reasons for that, and some of it's systemic, and organisations tend to be a bit smaller. Sometimes they find it a little bit more hard, obviously, to kind of secure public sector contracts. So income, that has an impact on income. But what we did, we commissioned a piece of research alongside Access, which is the Foundation for Social Investment with Power to Change. So we did a piece of research in 2021, which was published, and which kind of give us the evidence base as to the fact that organisations of that type are underrepresented in kind of social investment. So rather than just say, yeah, well, we did that, we know it's a problem, we decided to do something about it. So what we decided to do was to increase accessible repayable finance. We launched a flexible finance product, which sits alongside the Recovery Loan Fund. So the Recovery Loan Fund is a normal social investment product. And what it can provide, it provides loans of between 150,000 and 1.5 million for charities and social enterprises in England, Scotland and Wales. To qualify for the fund, you need to have a minimum turnover of 400,000. You need to be operating for at least 2 years. And the loan came with a 6-year repayment term, with a capital repayment being for the first 12 months. Thinking back to what I said about organisations being excluded from the market because of turnover, what we basically did, we came up with the idea for flexible finance. So what we did, we changed some of the criteria to enable organisations to take on the loan fund. So if you are a Black and racially minoritized organisation, then the turnover requirement drops from 400,000 to 200,000. The minimum loan amount drops from 150 to 50,000. But we can also, there's a grant element that can sit alongside the actual loan. So we have £2 million of grant funding, again, just purely for organisations which are Black and racially minoritized, majority led. So the way we define that, at least 51% of your board and SMT need to be from that background. Because the source of the money is access, we can only provide flexible finance to organisations that are based in England. So unfortunately, if you're in Scotland and Wales, we can still provide you the loan funding, but the grant funding isn't available. And again, you need to be going for at least 2 years. SIB, we've never done much work with startups in terms of funding them. There's other organisations out there who are really good at providing support for startups, and there's other social investors who will fund startups. So if that's the position you're in, we can have a conversation, and I should be able to do some kind of signposting as well. So the way the grant works, it's not a standalone grant. We can only provide it alongside the loan, but the grant can actually be up to 100% of the loan amount. it's an average of 90%. So, quite often you hear, well, I took 100 and then you only walk away with 50. Nobody would do that. The fund target is for 90% of obviously grant loan. So in most cases, it's 90% as a minimum. So what that means, if you come to us and you qualify and you need £100,000, you can walk away with a loan of 50,000, which is obviously repayable. But you're also walking away with an unrestricted grant of 50,000 as well. So it's what's termed blended finance. Used to be very popular in the social investment space. Hasn't been so much for the last few years, but it does seem to be making a kind of bit of a comeback. Couple of key messages, and this is what I say to anybody who's looking for social investment. What you need to do as organisations, you need to ask yourself whether that's right for you, because social investment's not the right solution for everybody. So, there's a couple of quick key questions there you can ask yourself. You need as an organisation, you need to think about what you want the investment for, and whether or not you actually need it. There's no point taking on the loan investment, just to get the grant. And to be fair, what will happen is an assessment process, we will kind of quite quickly pick up on that. So if there's not really any need for the investment, then it's not something we're going to be able to support you with. There's another side of that coin as well. I often say to people, look, if you can get the free money, get the free money. So if you have a need of, again, let's say 100,000, but actually, you've got some reserves, or you could get a grant for the full amount rather than a £50,000 loan and a £50,000 grant, then that's the avenue you should pursue. You need to be really conscious of the fact that the social investment side, it is repayable. There's an interest rate there, there's a term there, there's an arrangement fee there. That money has to be repaid. So really the most important factor in that is how you're going to repay it. If you're purely grant funded, it's not going to be the right option for you, because grant funders don't like their grants, being used to repay loans. But if you've got some trading income, that could be a contract, or you could be, renting out some of your space, or you could be delivering, a daycare service for somebody, and you're getting paid obviously through individual budgets or personal budgets. So any sort of trading income that can then be used obviously to kind of repay the investment. And what I always say as well as charities and social enterprise is, you should always ask yourself, and you should be able to tell obviously the investor, what social impact will the investment allow you to deliver? Where we are, the clue's in the name. It's social investor, not just investor. So whenever we're having a conversation, both are kind of equally important in our minds. So for the investment side of is how are we going to get repaid? But the social side of it, how is it going to allow you to do more of kind of what you do best? Or, how is it going to allow you to, improve your services? So it doesn't just have to be about an uptick in numbers and reaching more people. It can be about improving the quality of your service. But we're just as interested in that as we are the kind of the financial side. The other thing I think is always useful to put into things like this, is because invariably it's what we get asked at the end. What do social investors look for? There's three main areas that we look at. So the first bit is the financial. So it's most basic. What we're trying to do there, we're trying to assess the financial risk. Number one is the loan not getting repaid, but number two, to make sure that putting investment into your organisation is the right thing for you. We wouldn't want to put the money in, if it left you in a worse position, or it increased your risk of failure. That's kind of not what we're about. So fundamentally, we look at the historic financial performance. We look at your forecasts, including any ability to repay, and just assessing the financial risk and non-repayment, as well as just making sure that the social investment is the right option for the organisation. We look at the enterprise. So when I talk about enterprise, we're talking about the organisation. We're looking at who are you, where you're based, what do you do, what services delivering, what's your place in the market. Is there a need for your services, or is it really specialised? Are you a kind of general service provider? How well are you run? What does your governance structure look like? What does your management look like? And again, what we're trying to do there is just assess the enterprise risk to make sure that, again, number one, that the social investment is the right option. and number two, that we're not kind of setting you up to fail. And then the third thing we'll look at is what I've already kind of mentioned, which is the impact. Yeah, and just the fact we are social investors and kind of not just investors. We were going to have one of the partners come along and talk to you a little bit. Oh, Deborah's here. Hiya, Deborah.
Hi there, Christian. Apologies, I was late. Unfortunately,
No, it's fine. Rather than me go through the application process and obviously the role of kind of create equity in Ubele, I'm glad you're here because are you okay to talk about that bit, and then I can kind of do a couple of case studies once you've done your bit?
I introduce myself and what we're here to do to help and support.
Please.
So my name's Deborah Healy. I spent the first sort of 30 years in my early life. I worked for a venture capitalist fund, building and creating organisations from startup to some sort of more larger scale organisations. So I spent my early career doing that as a CEO, managing director, operational managing director. So I've got a real good breadth of experience in terms of what it's like to be a small organisation, startup, and taking that to building capacity and to improving the organisation's chances of success. So I did that in the early part of my career. Then I spent 10 years working for a large global media organisation on a transformation project, supporting them from moving from a traditional business into a more kind of digital business. So I did that for 10 years, again, working across many functions, many departments, particularly in the kind of commercial go-to-market strategy. So sales and marketing, that kind of area, I would consider myself an expert, but also got really good understanding in terms of setting up an organisation, organisational infrastructure, etc. And then most recently, the last 4 to 5 years, I've been working with organisations in racialised communities where they've not had the support that they might require to help them build and launch their own entities. So I come from a long history of supporting organisations, whether that was in the venture capitalist space, whether that was in the corporate global media space, and most recently in the last 4 years, supporting and helping organisations that might not have had that support in the past. So I've got a breadth and wealth of experience, and I'm really keen to support and help organisations that feel that they might need some support, particularly around the application process. If they want to talk about, have they got the right product, service, market fit, how that might look in terms of if we were to grow capacity, so for funding, etc. So I'm available and can support any organisation that feels that they could benefit from support through the process.
Brilliant. Thank you so much, Deborah.
So if anybody's got any initial questions, please feel free to ask me. I'm happy to stick around for the next sort of 10-15 minutes if that's helpful. If anybody has got any questions for me, I'd welcome, and I'll take them now.
So I mean, I've spoken a little bit about kind of what flexible finance is and how it's a grant, it's alongside the loan, and I think it's really kind of telling that it's a working. And yes, it is. During COVID, we had a loan fund, which was the Resilience and Recovery Loan Fund. And looking at the data for that fund, just over 10% of applicants were kind of Black and racially minoritized led, and only 3.9% of investments approved for organisations with people from that background. I think it was like a sum total of 3 investments. In terms of Recovery Loan Fund, I've checked the figures this morning, and actually 47% of applicants from organisations with Black and racially minoritized led, and over 22% of investments approved to date are from that background. So we've gone from 3.9% to kind of 22%, which I think is amazing. And it's yes, obviously it's the terms of it, but I think it's also the support that Create Equity and Ubele initiative can kind of provide people through the application process as well. Just a couple of quick case studies. Just a couple of examples in terms of the scale of some of the stuff we're doing. So the first one's quite a large one. It's a church based in East London. They've been around for like 25, 30 years. They've kind of rattled around different buildings. They were in these premises that they shared. It meant some of their community work that they could do, they couldn't do to the level that they wanted because, you know, they didn't have the flexibility of the space. What they've managed to do is they've managed to save some reserves over the years, obviously through kind of donations and tithes. And they wanted to buy a building. The building was 1.2 million. So they had obviously some of their reserves. They'd had an investment offer from Charity Bank as well, which is another social investor. But they needed some funding to be able to complete the purchase. So we were able to put together a package, 400,000, which was a loan of 220,000 and an unrestricted grant of 180,000 to enable them to complete the sale. The sale has completed. They are now delivering services in their church. And they tell me that things are going really well. What it also does, because they now have a permanent home, they're really hopeful that it's going to allow them to kind of, you know, grow their congregation and their income, because, you know, they're not going to have to move around, obviously, different areas of London. So you know, that's an example of one at, you know, at the higher level. Another organisation, which is a policy and action tank. So they do a lot of work in the fields of education, children, young people. They were really struggling for capacity to enable them to win new business. So what they wanted to do, they wanted basically investment to bring in new staff, which would free up obviously their SMT to go out and win new business. So that one, obviously, we provided investment of 100,000, which is a loan of 50,000 and a grant of 50,000. They've now employed their additional staff, and they're already reporting that, you know, that's been really successful in freeing up the SMT, and they're already now starting to win new business, which they might not have been able to do if they didn't have our investment that enabled them to take on the new staff. So just again, just a couple of examples of kind of, you know, the sort of things that people have used the funding for. At the same time, it's important to say that, you know, what it can be used for is pretty much anything. The grant is unrestricted. So, you know, whether it's around, you know, purchasing an asset or cash flow or investment in kind of staff or business development or, you know, whatever you can think of. There is some excluded sectors, which we don't see very often. But yeah, you can use investment for pretty much anything. I think that's enough to hear from me. So what I'm going to do, I've been told I can open up the question and answer by hitting the button at the bottom, which I am about to do. Let's see what that does. Okay, so there's no open questions. Martin, are you able to kind of jump in and tell me what I need to do for this? So Martin's telling me that there's no questions yet. So if anybody does have any questions on, you know, obviously the kind of technicalities of the fund or what you can use it for, or, you know, if there's any comments, then feel free to put them in the chat. Anybody? Must have done such a good job of explaining the fund and how it works. Yeah, we'll go. Yeah. So shall I just read these items? I'm not sure if everybody can say it. So the first one that we've got is to confirm, are you able to support the application process? So Deborah, do you want to take that one? Because that one's more you than a me.
Yes, of course I can, Christian. Yes, we will. So we will have an initial conversation with you where we can talk through your organisation's ambitions. We can provide support in talking that through, because I think that's really helpful. And then we can support you during the application process. And we can provide as much support as you need. So we can start preparing some of the standard paragraphs. And we can also discuss with you you know, what your kind of sort of short, medium and long-term plans are. But we provide that as a wraparound service, and that will be done with me. So it'll be done personally with me, and we can do that at a time that suits you. So, for instance, we know often organisations might be time poor, so we're happy to do that in the evening if it's helpful. If you're at full capacity during the day, so we'll provide whatever support you need in order to make sure that you make a good and strong and appropriate application.
And sorry, from a SID point of view as well, the way it works in practice as well is obviously when an application kind of lands on my desk, it's flagged up whether that's Create Equity or Ubele. Obviously, there's a support partner there, and I've worked with both to take stuff through the assessment process to investment committee, and both have been really, really good. In terms of obviously the support that they've provided, and it's not just through getting the application in, it's through the application process as well. So that initial kind of assessment call, it's not just SI bait, it is somebody from Create, obviously Equity or Belly Initiative as well, and then if they are on hand to support through the actual assessment process as well as just making out in the application, and it's worked really well to date, I just want to say thank you to Josh. Obviously, hello to Josh. Josh just joined. Obviously, Josh is from the Ubele Initiative, which is the other kind of delivery partner alongside Create Equity. Hi, Josh. What I'll do is I'll just take these questions one by one. Naila. So Naila says, obviously, thank you for the info on the funds. I'm a startup. What advice would you have for me? Naila, there's a lot of organisations out there who will support social enterprise startups. More likely too many to go through on this call. If you like, I mean, I'm sure we'll have your email address somewhere. I am more than happy to kind of get in touch with you and have a conversation with you and see if I can do some signposting and people like kind of Unlimited, which is like, they work nationally. There's also going to be some pretty good regional kind of organisations which may help support startups and social enterprises. So what I'll do is I'll follow up with that one, but I'll do that one offline rather than just give you loads of information now. Next one is from Claire, which is flexible finance only is flexible finance only available to organisations from minority backgrounds? Yes, it is, and like I said in the presentation, the way we define that is at least 51% of your board and SMT have to be from a Black and racially minoritized background. If your organisation doesn't fit that criteria, there is other social investment funds available, and depending on how much you need, we've recently launched a product called the Thrive Together Fund, which can provide loans of up to 150,000. Investments of up to 150,000, but that also has some grant funding attached to it. 25% of any investment total can be in the form of a grant. So if you don't qualify for a recovery loan fund, flexible finance, my advice would be to look at that one. And again, if you want to kind of follow up on that and have a further conversation, you can just get in touch with SIB and be more than happy to have that conversation for you as well. Next one was from did you say that you can use the fund for working capital? Yes, you can. That's absolutely fine. So yeah, if there's a working capital requirement, yeah, no problem. Or if it's asset purchase, bridge of finance, pretty much anything you can think of, as long as it's legal. Like I say, we do have some restrictions around sectors, but that tends to be like state-funded secondary schools and kind of healthcare services. And we also have to be careful. We work at the ESG investment goals. So it can't be for things like kind of gambling and obviously alcohol and obviously pornography, the normal exclusions. So Irene, you said obviously Henry contact you have a chat about the funding. I think Martin, who was up on Amy Barker, is typing an answer. I am more than happy for you what I'll do is I can put my email address in the chat, and anybody can just get in touch with me. I'm more than happy to have a chat about any funding requirements and stuff like that. So there you go. Just put my email in the chat. And Naila, I've got yours. I shall get in touch with you. 2 seconds, I'm just going to make a note of that so I don't lose it. Thank you, Marlon. You just saved it for me. So in terms of the criteria for the grant side of it, you know, we spoke about it at some length, but, you know, just as a reminder, SMT and board, 51, at least 51% need to be from a Black and racially minoritized background. There is a couple of additional criteria, which is you couldn't have borrowed before, or if you have borrowed, you haven't borrowed more than £25,000. But we exclude bounce back loans from that. So if you've had a bounce back loan of 50,000, that's fine. If you've had a bounce back loan of 50,000 and you've had repayable investment of 25,000, that's fine. If you've just had, you know, if you've had other social investment of say 100,000, then unfortunately you wouldn't be eligible. You would still be eligible for the main loan product, but not for the grant side. So for the grant side, really, it's around obviously that kind of racially minoritized led, and around the fact that you've never borrowed before, or you've borrowed a relatively small amount of money. Any further questions?
Was your hand up there, Josh?
Swatting a fly.
You're swatting a fly.
I mean, if there is no further questions, then, you know, I just want to repeat, obviously, thanks everybody for kind of attending. I hope it's been useful. Obviously, thanks to Deborah for coming along. Thanks to Josh for coming along. My details are there in the chat. So, you know, if anybody wants to have a follow-up conversation about anything to do with SIB or anything to do with social investment business or anything to do with flexible finance or Thrive Together Fund, I am more than happy to do that. So please just drop me an email, and I'm more than happy to have follow-up conversations with anybody. But barring that, I think that's it. Like I say, just thanks everybody for coming along, and I hope to hear from some of you soon if there's anything I can help with.